Hi, I love it. For those of you that don't know me, I founded Mogul Realty Group, and I've been in real estate for like 15 years. And this winter feels very reminiscent of when I actually started my career in 2007. I got my shiny new real estate license. It was actually a physical piece of paper, not just a PDF that they mailed me. And that was in October of 2007. And for those of you who remember what it was like, the market was crashing. Oil was at like $15 a barrel. Everything was falling apart at the seams. It was scary. And everybody said, you've got to be absolutely crazy to get into real estate. And I was too young and too stupid to realize it might be a bad idea. So instead, I just worked my butt off and started calling everybody and looking for opportunity and realizing that buying markets are ugly. It was an ugly time. People were scared. People were not willing to take action. People were doing what they're doing right now, which is we're going to wait and see. So when everybody's waiting and seeing, that's when we as investors can make big moves. That's when opportunity starts to present itself, because while everybody else is saying this is ugly, this is scary, this doesn't work, the news is saying this, TikTok is saying that, my Uncle Steve who bought a house in 2012 is telling me it's a bad time. While most people are doing that, there are sellers who want to sell. And if you're a buyer who knows how to buy, well, some good stuff's going to happen. So I'm going to pick up where Adrian left off. You're going to recognize this slide from Adrian's presentation, and I want to draw your attention to a different piece of information. So guys, this presentation is data driven. I'm a researcher. I was looking at different sources of information. So I'm not just going to say, this is my opinion. I'm going to interpret information for you guys and then make recommendations. So the piece of information I want you to take a look at right here, month over month sales volume is down 14%. Year over year, it's down 31%. That's what waiting and seeing looks like. This is people not buying. That's your stat. Now, let's look at factor number one. Interest rates have gone up, 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 up. We recognize this from Adrian's slide. So people are saying, I don't know how much higher interest rates are going, so I'm going to wait and see. Every time the market moves in a big way, it kind of feels like an earthquake. And what do people do in earthquakes? Well, if they're smart, they go in a door frame and they freeze and they wait and see. So the ground's shifting under us right now. This is the kind of thing that happened when the amortization got shortened from 40 to 35 years, when it got shortened from 35 to 40 years, when the stress test came in, when oil was negative $15 a barrel, when Trump won the election. Whenever something big happens, the natural inclination is to wait and see. The market has a little dip. And so we know interest rates are going up. But let's look at what's going to happen next. So in 2023, we've got a number of announcements. So the cool thing about the Bank of Canada is they already let us know when they're going to tell us what we want to hear. So the announcement dates have already been posted. This is just off of the Bank of Canada website. So on January 25th, March 8th, April 12th, June 7th, 12th, you can read that. That's when they're going to tell us if they're increasing rates, keeping rates the same, or decreasing rates. So put these dates in your calendar, put a little star on them, because when people are saying they want to wait and see, they're waiting for these dates to see what happens. This is a clue. We're going to come back to this. Now, the second factor that we want to pay attention to is immigration. So if we look at Canadian immigration stats, we want to bring in 465,000 new Canadians in 2023. This is just off the Canadian government website. This is research. You can look this up too. So that's a lot of people. How many of us would like one of those people to be a lovely new tenant in one of our rental properties? I know I sure would, because the Canadian government is committed to bringing in people that want to be here, that we want to be here, who are willing to put in the work. And so they make great tenants. And the immigration plan is targeted at helping the Alberta labor shortage. Hold on, what? There's a labor shortage around here? Did you guys know this? If you didn't know this, this is why I'm doing the research for you. So we're running into a labor shortage, and that ties into our economic situation. So the funny thing about this article is it's saying, oh, boo-hoo, you know, we're Elevated inflation interest continue to weigh on the economy, 2.8% GDP growth. That tells part of the story. The part of the story that I want you to also pay attention to is that the Canadian government is predicting that the Canadian economy as a whole is going to have negative growth in 2023. So right here in our own backyard, Alberta is going to be leading the charge economically as we round the corner. Now, I'm no economist, and so I don't really know how to calculate GDP, but when I think GDP, I translate that directly into one thing. Does anybody know what that one thing is? Starts with a J. Bingo bango. That's Tyler, by the way, the best darn property manager in the city. Helped me out with my presentation. That was a good assist. Thanks, Tyler. Jobs. And so where do new Canadians typically like to go? Where they can find work. I don't know. I heard it over there. Somebody else gave me an assist. Okay. So we're making jobs. A whole bunch of Canadians are coming. They're going to come somewhere. Are we connecting some dots? I think I know where they're going to go. Next factor is investment in housing. So the Canadian government wants new Canadians to come in. They realize they're going to need to live somewhere. They realize that affordable housing is going to be, hi Tracy, an important factor in this. So over the next 10 years, I don't know if you guys can read that, so that's why I circled it in red. You guys are going to get these slide decks anyways, so don't worry. 72 billion, capital B, billion dollars is being invested in affordable housing initiatives in Canada. They're going to spend 2 billion this year. And that's going to be spent in programs like MLI Select. So Adrian touched on the MLI Select program in his presentation. Does anybody here know of or is currently using MLI Select in a deal they're doing? All right. Yeah, hey, this guy, I'm doing one too. MLI Select is a subsection of the CMHC. So if you want to learn about MLI Select, again, we're researching, go to the CMHC website, use this handy dandy search bar and put in the words MLI Select. CMHC is pouring money big time into projects that are targeted at either affordable housing or energy efficient housing and accessible housing. But the big one is the Affordable Housing Initiative. So we're going to start connecting some more dots. Where is that money going? Has anybody noticed in the last like 3 or 4 years that like a dozen buildings like that look just like this have popped up all over the city? There's a bunch near the government center. This is the Hat, kind of in the quarters district. They're just popping up everywhere. All of these white paneled buildings with a couple of dark grayish panels and some windows that just kind of, they're all very uniform looking. These are not condos. These are not condos. These are purpose-built rental buildings. Can anybody here afford to build a purpose-built rental high-rise? No, me neither. This is big institutional money investing in Edmonton. So if people who work in money that starts with B, billions, think it's a good idea to spend this money in Edmonton on rental inventory, I would call that a clue. Pay attention to where the big money goes, because that is driving our economy. So let's look at the last piece of the puzzle for what I think is happening. So again, more research. Go to the website rentals.ca. You're going to find a very handy dandy report that I extracted this piece from that talks about rental market growth across all major Canadian markets. Edmonton, about a aggregate 9.2% growth in rents over the past 12 months. Pretty good. So we like that because interest rates have gone up. So we want the rents to catch up to those darn interest rates because we're experiencing a cash flow crunch in the short term. So let's connect the dots. Let's add up all of the research items that we've looked at. Interest rates are stabilizing. They've gone up, 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 and everybody's freaking out about it, and we're waiting and seeing. There are 500,000 new Canadians coming. They are coming. They're going to want somewhere to live. Alberta economy is going to be strong, which means there's going to be jobs that will be attractive to those people in combination with a massive institutional investment in housing in Edmonton. Institutional, that means big money, that means smart money. They know that these people are coming, which is why those towers that all look the same are popping up everywhere, which means there's massive rental demand. We know that that rental demand is being driven because we're watching the rent goes up. And there's a ton of buyers on standby. There are a whole bunch of people who have been waiting and seeing. So we know that the buying power has decreased a little bit because what you can get approved for has gone down. But that doesn't mean that these buyers have been vaporized and they've disappeared into thin air. They're just waiting and seeing. There's a massive pent-up buying demand of people that haven't bought because they just want to wait and see. So we got renters who want to rent in an economy that's attracting them, and we got buyers who are going to wait, who are going to want to buy because they want to wait and see for something to happen. There's our wait and seers right there. What are they waiting to see happen? Whoops. Wednesday, January 28th. I think we're going to see another interest rate increase, and it's going to be a bummer. But on global news a couple of days ago, after the December 7th announcement, the headline was Canadian Feds hint at stabilization of interest rates. So what I think the average wait and seer is going to want us to see is Wednesday, March 8th, no increase. Okay, that feels good. Was it a one-off? Was it a fluke? Or is it something I should be paying attention to? Wednesday, April 12th. As soon as that Wednesday, April 12th hits, if there is no interest rate announcement, that is going to directly coincide with the start of spring market in Edmonton. Spring market in Edmonton is always, historically, for the last 100 years, the busiest time in real estate in the city of Edmonton. So we're going to see a convergence of waiting and seers seeing a non-increase. They're going to be thinking, maybe I shouldn't wait. And then herd mentality is going to kick in. A whole bunch of people are going to rush into the market. I think we're going to see a strong spring. So do you want to wait till everybody else is buying? Or do you want to take advantage of this window that we've got right now? Either way, if you own property, this is good news for you. If you want to buy property, I've just given you like a 4-month runway to think about what you should do next. So here are some of the key strategic factors that you're going to need to keep in mind to stay competitive in our market right now. Number one, there's a short-term cash flow issue. How many people have noticed that it's pretty darn hard to find a property that cash flows in the city of Edmonton right now? Me too. Don't worry. You're not alone. Don't be embarrassed to put up your hand. Cash flow is hard to come by. So we need to have a cash flow strategy in the short term. A couple of suggestions I might have: furnishing, either short-term rental, which is like Airbnb, and or medium-term executive rental furnished by 30-day monthly terms. That's one strategy. Another strategy you might want to keep in mind is don't go for a 5-year fixed, go for like a 1-year fixed, so that when interest rates mellow out, you can refinance at a same or lower rate. Another strategy is what we're calling put a cash flow reserve in place. We know interest rates are steadily growing. And so if you're negative cash flowing, say $100 a month, this is what we call Vancouver style investing. This is what we do in Vancouver. It sounds crazy from an Edmonton perspective, but in Vancouver, at negative cash flow is $500 a month for 60 months. Okay, that's $30,000. Put it in the bank account. I know that the property is going to grow in the next 5 years, and that's a $30,000 investment in the equity growth. I know it's a very foreign concept for our Edmonton investment strategy, but this is how we do in Vancouver. This is how we do in Ontario in growth markets, and we know that a growth market is coming. Something to consider. Next strategic point, please, please, I implore you, for the love of God, respect leverage. This is not the time to be putting 0% down. This is not the time to take an expensive second mortgage. This is not the time to borrow money here, borrow money there, borrow money here. The payments will bury you. Do not over leverage in this market. It's okay to put 20% down. It's okay to put 25% down. You're getting in at a growth period. So respect that leverage. I know it's a sexy idea to put 5%, 0% down. Now's not the time. Not in this interest rate environment, not until the rents catch up. And the last piece of advice I will give you is don't buy crappy properties. Now's not the time to buy crappy crap. You are competing with those big, beautiful towers. That's your competition. If you buy a crappy property, the incentives that are coming for all those new towers, 2 months, 3 months, 4 months rent, the person renting your crappy place is going to say, for $300 more, I get 3 months of free rent and I can move into this big, beautiful tower. I'm in. So you got to have a place that looks nice. So if you're a BRRRR strategy person, make a place look nice so people want to stay there, or get a nice new infill, create a nice new infill, get a nice place in the burbs, whatever it is, make sure it's in a good location, make sure it's nice, because people will be leaving to move into those nice towers because of the incentives that those towers are going to provide. Remember, these people have deep pockets. They can afford to give 3 months free rent on every unit in that building to attract all the best tenants from every other building in the city. They're going to do it. Don't let it happen to you. So 2023 is going to be great. It's going to be really, really great. I just want to make sure you guys do the research so that you can strategically approach 2023 in the right way. And check back with me on April 7th, because I mean, I happen to think I'm right because it's my opinion, but don't be surprised if that's the moment where a lot of waiting and seeing evaporates and it's go time, because we'll have that stability starting to return with the interest rate environment. So I want you guys to be smart with your investing. I'm going to remind you one more time, this is not the environment to over leverage, and buy good property. Don't buy crappy crap right now, because you're going to be sorely disappointed if you do. So thank you guys very much. I also want to talk about Mogul Mastermind in 2023. You guys are helping build the community. We love networking. We love sharing ideas. We love sharing insights, and we're going to be bringing some really, really high profile speakers to the stage in 2023 to help you guys learn more about how to invest in the city and how to be awesome real estate investors. We're also going to be staying data driven. So we're going to be making sure our market updates are well researched. We're also going